In the last session, we have solved first problem on dissolution. In this session, we'll solve the second problem on dissolution with some more transactions in it. Let's see, as we have discussed in the last session, first assets at book value, then liabilities at book value, then we'll start with the adjustments in which we get assets realized, liabilities paid, expenses paid. If any assets are taken over by the partners or liabilities are paid by the partners, we'll see that step by step. Let us start with the asset side. The first is cash at bank, 10,000. Cash at bank should be entered in bank account. Now here, before we start, realization partners capital bank. The partners are Harish and Suresh. Liability side shows partners loan, see, Suresh loan account. That is the reason why we opened one Suresh loan account. So first, let us record the balance brought down in bank account. 2. Balance brought down. Cash at bank, what is given to us is 10,000. The next asset, stock. All other assets. Realization account on the debit side. The value of stock, 18,000. After stock, what we have is debtors 25,000 less provisions 3,000. Let us see how to record this. First, record two debtors, the original value 25,000. From this 25,000, we have to minus 3,000 rupees provisions. We have learned in the basics PUC 1. When we have to minus the amount from the debit side, we don't show it here, less provisions. Instead we take the entry on the credit side. 25,000 on the debit side debtors, provisions will take on credit side. So when you balance 25 minus 3, balance of debtors in the account will be 22,000 only. So here we have to show by provision for doubtful debts, rupees 3,000. That's not a liability, huh? That's a rectification entry what we have taken. From 25,000 debit side, we have to minus 3,000. How to minus it? By taking it on the credit side. Next, what we have is bills receivable, motor car, furniture, machinery, buildings. We'll record all these assets at book value. Here, 2. Bills receivable. We have recorded all the assets at book values. After you finish these assets, check out below buildings what we have. There is profit and loss. Profit and loss, the balance of profit and loss is on the asset side. Asset side means that's a debit balance. Debit balance is a loss. We'll transfer that to partners capital. When you transfer loss to capital, what will happen to capital account? It will increase. Loss will decrease your capital. Decrease in capital is decrease in liability. We debit. What is the amount of loss? 4,000. Harish and Suresh are equal partners. So 4,000 in the ratio 1:1. 2,000, 2,000. Let us record that in capital account. 2. Profit and loss account. Loss. Harish 2,000. Suresh 2,000. That's all with asset side. Now the liabilities. Before we take up any of the liability, first we'll take up the capitals, then rest of the liabilities. Check out what are the capitals of Harish and Suresh. They are given as 40,000 and 30,000. First, let us record this. By balance brought down. 40,000 and 30,000. Now, from the first. On the liability side, the very first are creditors. Creditors, below that are bills payable. Where we'll record this? These are the liabilities, realization account on the credit side. We'll take up by creditors and bills payable. Liabilities are entered, creditors and bills payable at their book values. Then we have Suresh loan. Suresh is a partner. So his loan cannot be taken as other liabilities, current liabilities in realization. For that, we prepare a separate account. Suresh loan account. 10,000 is the balance. Now the question is where to take a balance brought down, on the debit side or on the credit side. What is Suresh loan? A liability. 10,000 is a liability. Liabilities we credit. So on the credit side, by balance, brought down. Suresh loan account 10,000. When you pay the liabilities, along with the liabilities, his loan account must also be paid. Let's see. Next is a reserve fund. Reserve fund will be distributed among the partners. When you transfer reserve to the capital account, capitals will increase. Increase in capital we credit. Amount is 5,000. Will distribute in capital account by reserve fund in equal ratio, that is 2,500 each. Below that are capitals which already we have taken. That's all with assets and liabilities at book values. Now let's see what are the adjustments. In the adjustments they have given assets realized are stock, debtors, motor car, furniture, machinery, buildings, bills receivable. So what assets are there? Realized value are given. What is the entry for assets realized? Assets sold, cash account debit. Here we will call it as bank account debit. Bank account debit to assets account. But do we maintain assets account? No. To which account we maintain in common? Realization. So instead of saying bank account debit to assets account, we'll take it as bank account debit to realization account. First in realization, then we'll post it to bank account. So on the credit side, we take it by bank account. And below this, we'll take up all the assets that are realized. It starts with stock, 25,000. Assets realized, 1,02,000. What all is given in the problem we have taken. But as we have discussed in the last session, let us check out, is any asset left out? Stock realized, debtors realized, bills receivable realized, motor car, furniture, machinery, building, motor car, furniture, machinery, building, all assets are realized. If any tangible asset is not realized, we realize that at book value. If intangible asset is not realized, we leave it out as it is worthless. Now, we'll transfer this 1,02,000 to bank account onto the debit side. We are transferring from realization account. So let us take it as 2. Realization account 1,02,000. What amount we have transferred is for assets realized. Fine. Check out. After assets realized, what is given? Creditors were taken over by Harish at book value, and bills payable were paid by the firm at 5% discount. First, we'll show the creditors. They are taken over by whom? Harish. If they are paid by firm, realization account debit to bank. They are not paid by the firm, but they are paid by Harish. So, realization account debit not to bank, but to Harish capital account. So, let us record that. 2. Harish capital account. Creditors are taken over by Harish at book value. What is the book value of creditors? 25,000. That means Harish has agreed to pay the creditors of 25,000. Into bracket, we specify creditors taken over or creditors paid by Harish. Now, we'll transfer this to Harish capital account. Which side? It's on the debit side. We'll transfer, we take it on the credit side by realization account. In the column of Harish, 25,000 into bracket, creditors taken over or creditors paid by Harish. Next, bills payable were paid by the firm at 5% discount, paid by the firm. Realization account debit to bank. But how much they are paid? 5% less. What is the amount of bills payable? 10,000. Of that 5%, 500. 10,000 minus 500. How much firm is paying? 9,500. We can prepare a separate working note for this, or we can do it directly. Here. 2. Bank account. 9,500. Nothing but bills payable paid at 5% discount. If you prepare a working note, separate working note, there is no need to show that it is paid at 5% discount. Just bills payable paid. Since we have not prepared the note, we have done it. Now, let us transfer this. To which account? Bank account. Bank balance will decrease on the credit side by realization account. Amount 9,500 into bracket bills payable paid or liabilities paid. One more transaction. Realization expenses amounted to rupees 2,000. Is it mentioned paid by Harish or Suresh? Who should pay then? Firm should pay. What is the entry? Firm has paid the expenses, so realization account debit to bank. Realization account debit side, we'll take it as 2. Bank account. The amount of expenses is 2,000. Into bracket will specify as realization expenses paid. Transfer it to bank account on the credit side by realization account. Amount of expenses 2,000 rupees. Into bracket realization expenses paid. That's all with all the transactions. But before we start balancing, just have a look at the liabilities. Realization credit side. Are all liabilities paid or taken over? Because we know that whether it is mentioned in the problem or no, we should pay the liabilities. Let's have a look. Creditors 25. Yes, Harish has agreed to pay that. Bills payable 10,000. It is paid by the firm at a discount of 5%. So we have taken all the transaction. Now let us balance it and see what we get. A profit or a loss. So the total of the credit side is 1,40,000, but the debit side total is more, 1,45,500. From this 1,45,500, when you minus the credit side, we get a balance of 5,500. It's a debit balance. Debit balance means a loss. We'll transfer that to partners capital account. By partners capital account, we'll distribute the loss 5,500 in 1:1 ratio, what we get as 2,750 each, and then record it here. Loss of 5,500 is distributed. Let us transfer that to partners capital account. 2. Realization account 2750. This is nothing but the loss on realization. Now let us balance partners capital account. Harish total 67,500. Total of Suresh capital 32,500. We'll write it on both the sides. From this, minus it. This total is 4,750. So when you minus it, what you get is 62,750. From this 32,500 minus the debit side, what you get is 27,750. Whatever balance we get, that is the balance payable to the partners. Let's pay that. 2. Bank account. into bracket, balance paid, transfer it. Now, after capital is Suresh loan. We have to balance Suresh loan, but before balancing, we know that it's a liability, we have to pay cash to Suresh loan. What is the entry? Cash paid to Suresh loan. When you pay the cash to the loan, loan will decrease. Decrease in loan is decrease in liability, we debit. At the same time, your bank balance also will decrease. Decrease in bank balance, we credit. Loan account debit to bank. Loan account on to the debit side to bank account into bracket paid. Full book value of 10,000. So Suresh loan account will not show you any balance. Transfer that to bank account by Suresh loan 10,000. Your bank account should tally. The total here on the debit is 1,12,000. That means 1,12,000 is the available cash. Payments should be 1,12,000. When you total this, the payments will come to 1,12,000. That's all. This is how we do the problems on realization. I repeat, the entries, remember, first assets at book value, liabilities at book value. Then we'll start with the adjustments. In this session, we have solved problem number 2 on dissolution. In the next session, we'll take up problem number 3. Thank you.